this is some data that came out yesterday. We have two data points we're looking at. Well, more than that, but two broad categories: it's sales, retail sales, and then manufacturing. Both well, the retail sales came out really strong. I want to say 3% was the there you go, 3% increase in January and that's more than expected. So it shows that the consumer still out there buying, even with prices high, a little higher than we would like. There's still strong demand, and that's a function of the labor market, right? If you have hiring, you've got more people working, there's more people getting paid, so it goes to reason there's going to be more consumption.
And it's news like that that's more reason the Fed in the future will take a stronger position at maybe 50 basis points instead of 25.
Yeah.
The good news is, do I feel that we're at the bottom, so to speak, of the market? No, that doesn't make sense. It feels like, based upon what the Fed says it's going to do and how the market is still showing strength, and they like to get a little bit more of a reaction for these policies, it seems natural that we should wait for a little while longer for the market to kind of deflate and get back to what the new normal is going to be. That being said, slowing down to 25 basis points and seeing these changes in the velocity, right, in the rate of these rate hikes, I can see how that's been a positive ripple and sign. And one thing that's good to know throughout these cycles, which is another reason why we're going to continue putting these together and how it's all correlated. Hey, there are some great projects that are still building out and that are still developing, and there are some amazing things happening in the market despite these recessionary times, and that's we'll kind of get to later on if you're interested in knowing some of these projects that are doing it. But but it's good to know that even months into the rate hikes, you still see development and life and partnerships and collaborations with blockchains and institutions and nations. So a lot of exciting things are still happening. But
I was going to touch on that manufacturing number real fast. So yes, it rebounded 1% in January. But what's not in this story is that a Philly-based manufacturing index actually tanked. So there might so this is a nationwide index, but locally in Philadelphia specifically, there is a survey, and I didn't.
Is it 20-something%? Was it something?
Yeah, it was a large contraction. So
that's 24% or something.
It's worrying. I guess definitely worrying if you're in the manufacturing industry in Philadelphia, but it's good because in a sense that it shows that, hey, there is some impact. This is one of the only sectors where you could say, oh, look, the Fed's having an effect on the economy. And just as an aside, it actually goes to show, it goes to reason that manufacturing would be the first sector to really show an effect or a response, because they deal with some of the most interest rate sensitive investments, right? They're involving large capital purchases, and they have to be depreciated, every year, every quarter. There's a lot of reinvestment in these capital purchases. There's a lot of inputs they have to purchase to make, so they're making intermediate and early stage goods. So these are the things that are so far back up the supply chain, essentially, from the consumer. They do require a lot more capital goods and raw materials and things to produce. So there's a lot of interest rate sensitivity, and in cycles, these tend to be the industries that expand at the beginning of the boom, because the lower interest rates and the credit accommodation, it goes there, and there's an expansion that happens there early. And they're also the early industry that shows problems and excess inventory, and have to see prices go down and the margins get squeezed. That happens in these early stage goods sectors when the economy starts to roll over in a recession. So to see this contraction happening in the manufacturing while retail sales are still strong, while housing is still strong, that all goes along with theory. It's not an anomaly. It's what you would expect, and historically it's in line with what we've seen. So kind of a canary in the coal mine, if you will.
Hey, if you like that clip and you want to hear the rest of it and learn more about macroeconomics, cryptocurrency regulation, and the opportunities out there, hit the link right here for the full conversation that we had, or here, wherever we put it. I'm not sure. But you can also support us by hitting the like button and the subscribe button. So when we drop our next content, you get it right away and don't miss those opportunities. Also, there's more.
Yes, if you would like one-on-one assistance or even a group meeting, we can provide consulting and advice on crypto gateways and exit ramps, as well as securing your crypto, as well as swapping, storing, or staking, or NFTs, or any of the above. So feel free to fill out the form at our wisebeyondbitcoin.com website. We'll get back to you and schedule a meeting.
Absolutely. We've been in blockchain and crypto for several years, since the 2017 ICO days directly, and following it since the beginning, actually, and been in economics and finance for years before then. So we look forward to helping you in your education journey. Feel free to let us know if you're just looking to learn more about market diversification. Blockchain and crypto, there's layer ones, layer twos, NFTs, applications being built. So if there's something we can do to help you, we look forward to it. Until then, thank you. Namaste, and have a beautiful day.